Hello again, today is Friday, June 14, 2019. This is Alex with MasterChartsTrading.com, and this is a market recap. As always, please hit the like button first and subscribe to this channel if you haven't yet done so. We will cover quite a bit of stocks today and various stock funds, and I'll give some examples also, recent trade example, and we'll look at Chinese shares, FXI versus SHR. Then we'll go into bonds, as usual, investment-grade corporates and treasuries, or rather, I'm sorry, junk bonds and treasuries, and also we'll look at oil and the tensions in the Middle East. Gold touched a new high, and we'll look at the intermarket relationships, or rather the forex relationships between gold, dollar, and some of the currencies. So we'll look at Australian and New Zealand dollar, for example, this time. Bitcoin, Litecoin, Ethereum also breaking to new highs. So if you opened recently, congratulations. Let's look at our S&P 500 ETF SPY. So last week, basically, so first of all, this is an actual alert to my subscribers. Throughout the presentation, I'll be using my proprietary trading indicators, which you can see on this chart, the green, the blue, the red, and the yellow line. You can have the same indicators on your chart by going to MasterChartsTrading.com and sign up there. I also send alerts such as this one right there. So overall, this is a bullish chart. Why do I say so? Because the only piece of information that I'm worried about on this chart is the fact that the price has closed above the blue line right there and has not yet closed below the yellow line. And these are stocks. So this is the reason why I put the stop on the yellow line is because there is a bullish bias for stocks. In other words, stocks tend to just go higher. So you want to stay in stocks as long as possible once you open the position. So here you can see from May into early June we had a correction and it almost reached this blue line. It did reach a blue line for the QQQ right there on 3rd, 4th of June. In fact, this is an actual alert right there on 4th of June, and you already made nice money there, especially if you're trading options. This is a huge move in your favor. So overall, you can see that some people can argue that this is a head and shoulders. Maybe this is a left shoulder, the head, and then this is the right shoulder. Now, we could still get a retest of the shoulder, and we can see a price come down, and maybe we'll even break it. In that case, maybe this will work. I'm not a big fan of various chart patterns. In fact, I don't really use them at all because I think my indicators are just so much easier to use. All I need to know is, am I buying or shorting, or in this case, which is buying, and at what level am I buying? And I usually buy around the blue line. So I just simply sit and wait until the price comes down towards the blue line for any security. And then I just buy it there and then ride the new wave higher. Dow Jones very close to record highs. So bullish bias again. I would be looking to only go long. I would be only looking to buy. I don't want to be shorting. I don't want to be looking for any top-in patterns of any sort. When or if we break down below the yellow line, then we can say, okay, now we can look for a shorting opportunity or just unload all of our shares. Some stock sectors have actually hit record highs. Here the record high for XLP, consumer staples. And yes, some people will say that this is a defensive sector. Aren't you worried about this being a defensive sector? Yes and no. I'm not really worried because this is a stock sector. If this was some kind of a bond, maybe I would be a little bit more worried, but this is a stock sector. So stocks and other stocks move together in lockstep. So if let's say the consumer staples are moving higher, most likely other shares and other sectors are also moving higher. It does indeed affect the fact right now as well, because we can see a general push towards fresh all-time highs. Let's look at some of the foreign stocks, and here is one of those. Here are one of those, FXI, Chinese shares. Now, it's a little bit of a busy chart. On this chart, you actually see a couple of alerts. One happened on 19th of March, the other happened on 1st of April. And notice that so far, it has not worked out in our favor. Also, the stop is getting very close. My stop is, right there. Now, people will say that, isn't that crazy? You have such a huge stop and such a small target. Now, you have to understand that my technique is when the target is reached, I move my stop to entry. So, if or when the target is reached, then this stop that was down below here, it will be at entry, and that means there's no loss. So, just to get back to this particular chart, and if you're interested, you can sign up and I can teach you all of this stuff. But to just get back to this chart, it's kind of interesting to note this price action. I'm going to zoom in on it right now. Notice the indicators curving down right there on the 11th of June. You can see price action come up exactly to the indicators and bounce off of it. It's not it's not a great sign that we're trading kind of near the lows. I think this chart can still be saved so long as there is a push higher. And what's nice is right now these indicators are coming down, so the price has less distance to travel. Before back in June 4th or so, June 4th or 5th, notice how far the price action had to travel. Let me just for example, from 3rd of June to the blue line, it was 10.4%, but from about the same levels right now to the blue line, it's only 6.6%. So this makes it easier for the price to get to the bullish levels, and I think it's still very much possible for this chart to turn around and continue higher. Here is ASHR, mainland Chinese shares. Here you can see that it's not as weak as the other chart that I just showed. Here's FXI again. You can see the price has dropped below the red line here in May. But for this chart, you can see that the price actually did not drop below the red line. And in fact, it's trading quite close to the blue line. And the blue line is basically all I need. If there's a close above the blue, like for example, one was right here, 25th of March, you can see that we had a nice run higher, and this would have been a successful trade. You have to be somewhat nimble, yes. You get in here, a few days later, you may want to do stuff. For example, you want to take some profits, or you want to move your stop to above your entry. So then if this type of thing happens, that happened afterwards, you can see the price is now below where you could have entered. Then you would have been already stopped out, and you would have a profitable trade on your books. And if you just kept it open, then you would have a losing trade right now. So you do need to be somewhat nimble, and you need to know what is your trading horizon. In other words, are you okay with taking profits just a few days later? If you're okay with it, then you should just stick with what works for you. But if you want to have a longer term trades, then you may need to think about longer time horizon. So for example, this you're in profit here, and then a few days later you're not in profit, but you don't really care because your holding period is like 3 years. In that case, you may want to consider just holding through this drawdown. It's really up to you. Here's an example of a recent trade. and exactly the same thing as before. I knew nothing about this particular stock. It's CDLX, Cardlytics. I think I already presented it a few days ago, but I was just kind of browsing various stocks and I found this one. And there's the breakout on 21st of May. Next day I sent an alert to my subscribers at MasterChartsTrading.com, and you can see almost immediately just boom, went 21% gain. So congratulations. But overall, this is just basically all I do. I simply stopped worrying about things like what do this company do, where are they incorporated, and all that. So I don't really care about their profits. All I care about is whether or not my conditions of entry were satisfied. And in this case, yes, they were satisfied. Right there on 21st, 22nd of May, you can see an alert, and it went to nice profit there. So this is basically what we do here at MasterCharts Trading. If we continue to various bonds, here's junk bonds, JNK, or high yield corporate bonds. These are basically trade like stocks. You can compare the S&P 500 to JNK, and the shape of the graph is quite similar. Here is SPY, and here is JNK. You can see it's really similar. So junk bonds, some people take advantage of the lower volatility and high yield as compared to S&P 500 or other stocks. So it will really depend on the trader. But yes, it's possible to trade junk bonds, similar to stocks basically. And right this instant, I don't see any divergences. In other words, both stocks and junk bonds are moving higher together, and there is no, the shape of the graphs are also very similar. You can see SPY versus JNK. So if there is no divergences, that basically means, to me, it just means that we need to be looking to buy both the junk bonds and the stocks. Let's continue to the various treasuries. Here's one treasury bond fund, 20 plus year treasury bond fund. So TLT hit a new high here in June, on 3rd of June, and then pulled back. I honestly don't know, it doesn't look like this correction is over. I think we may get still a pullback, although it's possible we'll just break higher too. So TLT breaking higher, not a great sign, because usually when treasuries, and these are probably the most safest investments out there, TLT, when the treasuries move higher, then usually stocks come under pressure. But right this instant, it looks like we have both stocks and bonds in the bull market. So this behavior right this instant is not surprising, but overall I am a little concerned that bonds, especially the investment grade corporates, and especially the treasuries, are moving higher. So we'll see if the Federal Reserve will decide to lower the short-term interest rate or not. Here's TYX, the opposite of TLT, which is a 30-year treasury note yield. And you can see it's close to fresh lows. Okay, so let's continue to commodities and Forex. So here is here's oil, rather, CL1 exclamation point, oil futures. Here's the breakdown on the 31st of May. And this is what I sent to my subscribers. I would be looking to enter short at $55. Here on 10th of June, the high was 54.84. So if you entered at 54.84 short, then congratulations. It's probably enough already to make nice money there. It seems like it wants to go lower, and here on the 13th of June, where we had that incident in the Strait of Hormuz with oil tanker being attacked. So it's a concerning situation for sure, but right this instant oil doesn't seem to react terribly to it. In fact, if we make a new low, I think that incident would be shrugged off. Hopefully it will be shrugged off, because like we definitely don't need another war. To look strictly at the charts, I think this is a bearish chart now. Oil seems to have entered the bear market right there on 31st of May. And I think it might just continue lower. Alright, let's look at gold. And this is a new high. Congratulations if you opened recently. This is a nice gain of over 6%. So if you trade in XAU USD or gold futures, you know this is a nice gain. You can see 3 alerts. These are actual alerts. I sent them to my subscribers. And you can see they're worked out quite nicely. Now, gold gaining, you can see it's XAU divided by USD, XAU over USD. Gold gaining should imply USD weakening, but it's not. So you can see DXY actually moving towards fresh highs. But you can see the trading range now is super tight. You can see the distance between where I'm hovering the yellow and the green lines here currently in June of 2019 versus what it was just a few months ago, let's say in March. Look how wide it is. Look how tight it is now. Look how tight the lines have become. So what this means is the price has less distance to travel towards bearish levels. So we will see if that actually occurs, because right this instant I'm actually seeing fresh lows for the various currencies. And for example, here's well, not fresh low, but if I was trading AUD USD Australian dollar, you can see the price action. I'm going to zoom in, and it's just amazing. Right there on the 7th of June, you can see a touch of the indicator line, and then it kind of went down. You can see it ended right on the yellow line today as well. And same goes for New Zealand dollar. I was telling my subscribers right there, basically on June 5th, June 6th, or June 10th, I would have probably shorted it, and there's a nice gain right there for you. So again, congratulations if you opened. Let's finish up with crypto review. Here is Litecoin. And Litecoin just doing excellent. You can see a 95% gain from the actual alert. Yes, the alert right there, sent on 26th of April. You can see I wasn't really double guessing anything. First, the breakout occurred right there on 2nd of April, but this breakout was so powerful that there was no opportunity to enter because it occurred like within seconds. But this opportunity right there, several opportunities from 24th of April until about 29th of April, maybe even a few days later, there was an opportunity right there on the 9th of May, 10th of May, and then it just took off with a 95% gain. So again, Litecoin, congratulations to subscribers. Bitcoin, this is my position. You can see I entered, this is my position on Coinbase exchange. You can see I entered right there on 6th of May at 5,711, sold half on a few days later at 7,700 or so. But you can see right this instant, this is actually a live chart. You can see this big candlestick, and it's just approaching highs. So I have a feeling we're going to see a fresh breakout. So right this instant is 55% maximum gain, but it looks like it might go higher from here. Same goes for Ethereum. Notice the breakout right there on 13th of May. This is an actual alert to my subscribers at MasterCharts Trading. You can see a 48% gain right there, and I still think I think this is gonna go higher. This looks like a bullish candle to me. All right, so please head over to MasterChartsTrading.com, then click on sign up and sign up for one of the services. You can sign up for alerts, trading indicators, or for both alerts and trading indicators. Now, people who are just beginning, they usually sign up for just the alerts, and the price is relatively, affordable at $24.95. But with indicators, this indicators right there, you actually get to trade on your own, and you can trade on your own. So some people just want the indicators, just to trade in indicators, and they're $29.95 per month, or a little bit less if you sign up for a year. And of course, if you get both alerts and indicators, it's just the best value. You can get all of the features. You get my alerts, and I monitor about 200 shares or various ETFs, various stocks, commodities, gold, now cryptos as well, and I actually trade myself constantly. So you get to see my positions, but you also get lots of alerts. So you get to choose which ones you would want to take. So overall, of course, the best value is to get both alerts and the indicators, because if you were to buy them separately, it's going to be well over $50, but you can get them for $45.95 per month, or even less if you sign up for a yearly. If you have any questions, also you can send me a question right there, contact. Or you can also, if you have a TradingView account, you can also chat with me. And I am at MasterCharts. Alright, that's it for this week's recap. Again, if you have any questions, please send them in. And please hit the like button, subscribe to this channel. And I hope to see you as one of my subscribers. Thank you. Bye-bye.